Hello guys, glad to have you on board again today. We don't have that much time today. I'm pretty tight in terms of schedule, so I'm not going to take the question session today. So if you had posted questions you absolutely want answers about, you just have to repost those questions into today's session and I'll answer those at the next one. So as usual, we're just going to get it started with the Bitcoin and having a look at the daily chart time frame, just removing all the technical analysis first. What you have in front of you is nothing that you should be concerned about. Pretty much sounds like a triangle structure or something close to it, so not a big of a deal actually. The plan lately was just to basically wait for the prices to plot some kind of range structure and to assess the potential risks underlying that structure and seeing if that would require a new bullish entry to push to higher prices or big danger to see some kind of potential reversal. And from what I can see right now, it's nothing close to a reversal, more likely building a range. Still hard to figure out what that range will actually look like. But I don't see that big of a risk at that point, and this is what we'll probably see into the H2 time frame right here. I think the structure we might terminate for that range might be some kind of triangle indeed, with an ABCDE structure. That would actually be pretty much near completion, which means that at that point we could be nearing a potential bullish entry signal, but the problem is that the indicators are not showing anything close to this. So I suggest right now doing nothing is the best choice and basically waiting to eventually have some kind of bullish breakout mode. So trading that triangle just because it looks like a triangle would pretty much be a mistake to me, at least being way too aggressive to make a bullish entry out of this. So I'd rather put this thing a lot simpler. It's the case that either we're going to hold those supports, and in that case the bullish breakout of the structure will be some kind of bullish triggering entry to me to get to the next bearish levels, which are nearly 8,700 in that price area upon signal only. So it's either we go there and I'll have something that worries me, or I just keep on pushing to the price I'm ready to sell, which is 9,000 approximately. So it's basically buying in here to target this with a stop loss below the low we'll have made. And of course, if for some reasons we were to fall back again afterwards, I'll have to give a stop loss, and that's part of the game. I mean, that's how it is. If the market shows us to get up there to just trap me in and then break it down, then I'll have to surrender and give my stop losses, okay? So that's how it is. If the market just keeps on falling, and if you're buying this blindly without any clues of a signal, basically, you're just not respecting the strategy. So once again, you do as you please. I'm not telling you what you should or shouldn't do. All I say right here, right now, is that I personally won't do anything regarding Bitcoin. I have nothing close to a signal that would suggest making buy-in entries. So if that triangle is the structure, and if we break it up, I'm ready to take a signal, which means a breakout trade. But I'm only doing this if we get there, which is 8,300 approximately. If we go there, I'm ready to take a buy entry, but that's the only condition. Second condition is that we're nearly nothing close to a triangle. In that case, we're going to extend the bearish signal to the previous support area, which is basically being in an extended range in which we'll have sold the red area, crossed the dome area, and bought the blue area. So the only price I'm ready to buy in a range kind of scenario regarding the Bitcoin is right here near 7,500 and slightly above. So if we get into the blue area, triggering some kind of bullish momentum signal or whatever, I'm ready to take the signal. As long as we remain in here, to me, has to be traded like a down area, which means you don't trade in here. Only solution will be to hold the dome area and get to break the resistance to get to validate the fact that the range will be over. But from what I can see right now, we are failing to find the support we need to break that resistance. It might require us to have a deeper pullback. And if that's the case, then things are not going to be pretty regarding the altcoins. I've been making a pretty quick improvised live right now for the French users, because I know you guys have been sweating a lot when the Ethereum has been trying to break out supports. But just as I said that the Bitcoin didn't trigger anything close to a signal to buy, the things are pretty much different regarding the Ethereum. Because this is the scenario I've been forecasting for the French users earlier today that has just been taking place. So this is not something that you should worry about regarding what's happening right now for the Ethereum. It's just that Ethereum is now testing a support. It's kind of a last chance support, because if for some reasons we were to break it down, then simply I'll get out, because my technical framework suggests we shouldn't break down that low. If we do, it means I'm wrong, and if I'm wrong, I have to take a loss, and that's how it is. I mean, a technical loss, a speculative loss is part of the game. Whenever you speculate, you cannot be right or wrong. You don't give a shit about that. All you do is to limit the risks, to don't lose that much if you're wrong, and prepare for reinforcements if you're right. It's just that simple. So what I'm trading right now is actually this. It's just that I've been putting a bullish breakout entry in here, which means I'm reinforcing if we go there. If we're just wrong footing the bears and just triggering some and getting to the supports to find bulls and get to break up resistances afterwards, I mean, to me that will be a confirmation, and this is what I want. So I've been putting right here a bullish entry upon breakout only. So it's, if we retrace back to the previous bullish cycle, it means that we just give some room for the bears. They're not taking it over, and the bulls are still in control. And if they're in control, not breaking that support and getting back to resistances, I think we're going to break them up, and I think that time will be the right timing for the altcoins to perform. Second option, they just don't. We break up and fuck up that support. I'll have to trigger the speculative stop losses, and that's end of the speculative game regarding the altcoins. I'll probably get stopped out on Ethereum, Ripple, and IOTA all in the same time, and in that case, I think Bitcoin is going to flush lower levels. If that's what's about to come, then I don't give a damn. I mean, I will take a tiny loss far below the gains I've been making into the Bitcoins recently. So I'll just give away some of those gains from Bitcoin, just trying to make other gains into altcoins. I mean, I will have been right in the first scenario, wrong in the second one. I would have gained much less losses into the failure than the gains I'll be taking in the completion of a scenario. So that's how it is. It's just applying a strategy. I'm nothing close to stressing or any kind of irrational behavior right now. I'm just waiting to see what the price will do. And at that point, I have no fucking clue. I'm just waiting to have some kind of momentum confirmations. But in terms of technicals approach in here, we've got something slightly more tradable than what this is on the Bitcoin. Because yet the price is failing and it's moving downward, but we do have only bullish signals recently. We've got bullish support, try to make a bullish breakout, somehow failed it, which means in here I've been reinforcing. I've been taking a trade in here. Didn't work out well as we tried and worked out area, and here instead of making a bullish breakout, we've made a bearish outcome. But still, sine wave is detecting some bullish outcomes throughout the cycles. So we've been breaking that bullish cycle. Yes, okay, it was untradeable because we were back then into a squeezing pattern. And remember, squeezing is absolute forbidden to trade speculatively when you've got this. Means you cannot trade this as a bullish signal. You can only trade upon breakout. This is what I've been doing. When we were back then accumulating the volume inside that squeeze, I had my target, I have my stop entry set right here just to get in if the market decided to go up. I want the market to go up. If the market goes to the opposite side, means I'm taking speculative losses, which are just pending at the moment because I don't see that much of a risk remaining bullish in such markets. But if I'm proven wrong and if we're getting down here, I'll have to trigger the stop losses. That's pure and simple. If we go there, means that there's no bullish support. If there's no bullish support, I don't want to remain a bullish myself. Okay, so that's how it is. I don't have that much fear at the current pricings. We've got lots of supports in here to test. I don't know what the outcome will be. All I know is that right now I want the price to stabilize, showing me that some bulls are at play at the current prices, and I want to see a bullish outcome. That's all I want to see. I mean, showing those prices, to me, it was kind of expected. But now that we're there, I want to see some bullish support. I want to see some bulls, guys, buying in and piling gains, and piling positions in there, and whenever I have the bullish out release out of this, I'll get into putting a reinforcement myself. But I already have been putting some of those, which means I'm not ready to take more risks inside that scenario. So there is typically a pending bullish entry, just requires some more patience to work out the price area in here to get probably what is going to be, I think, a bullish outcome. But I'm not going to take it aggressively, as I've been already putting some leverage into, I'm not leveraged, but I've been putting enough risk regarding what I want to risk on that scenario. So I'm not going to piling up the buy entries into the speculative scenario. I'm just going to wait for now to get a confirmation, and whenever I get confirmation, the scenario's risks will be narrowing, allowing me to put additional entries. That's how it is. When the scenario's risks is going to lower, I'm going to be able to put some more leverage. But right now, I think I'm at the right exposure regarding the risk I have, I want to take on that scenario. So I'm not piling another entry right here, even though this is an area to buy. Clearly, sine wave is suggesting this. We're on support area. We've got sine wave bullish target in here. All we're waiting for is to have a bullish momentum, and I think that's at some point going to happen. If you have a look at the bearish trade line that we have in here, it's in negative value, and we're in minus 26, which means we are far ahead. We're far into that bearish trend. I mean, that bearish trend got pushed for long enough. I think right now it's about to end, and anytime we get back to that trend line, I think it's going to break up. So it's still bearish at the moment, but the bearish potential is really tiny. The fact that this trend has been ongoing for long enough, and if we fail on that support, I think we're going to have some reversal. It's just that the momentum has been exhausted at some point right here. We've been using that bearish momentum for long enough. At some point, it's going to reverse, and that's just what I wait to see. I want to see the momentum reversing to bullish by breaking that trend line, making a pullback, and then I'll be ready to buy. This is what I forecast the price to do. Stay in that area, making some kind of pullback just to break up the trend line. So what I forecast from now is kind of a momentum pattern. I want to see the momentum do something like this, and this is the moment I'll be ready to buy. I want to buy the next low. Whenever we make that low higher than the previous low, but after breaking up the trend line, I think this is the low I'll be ready to buy. So I think we're going to go slightly lower in terms of Ethereum, and I already prepared for the price I would like to see tested. I would like to see the price handling the $432 right here, right now, and not making new lows than that at the moment. I don't want to see a market collapsing. I want to see a market supported on that price, working the area for quite a bit, let's say a few candles, and then I want to see some kind of bullish exhaustion in here, going slightly lower, but this is the price I'd like to buy, 429 approximately, but I don't want to see that price tested right now. I want to see that price tested after ranging the upper area. Okay, so in terms of a 15-minute time frame, this is what we have right now, and I would like to see the price extending the range in here, finding support right now at 432 again for the second time, kind of ranging a little bit higher, and then working its way to down again, and this is what I'd like to see. Okay, in terms of patterns, this is what I'd like to buy. Having the momentum pushed a little bit further later on a tiny bearish breakout. I don't want a price to spend that much time in here. Normally this is where you should get the best possible buying prices, which means we shouldn't last here for a long time. We should make some kind of a brutal V-bottom structure, but all the way in at that point. And this is the price I'm ready to buy. Otherwise, I'll just wait to have the market reversal. Anytime we get to retrace down to that previous support, the one that we've been breaking down basically, we've broken down that support. Anytime we go there and consider it as a support again, I think this is where I'd like to take a bullish entry as a confirmation. This is breakout entry, this is speculative entry, but as I said, I've been putting enough money inside that scenario, which means in order to put some more, I need to have a higher level of confidence. What I have right now is not enough to me to get into adding another position into that scenario, so I'll just wait to have reduced risks. If the market is just taking all the risk in here and reverses brutally, then good for me. I'll take the breakout entry, but not the speculative one. In order to take a trade in here, I absolutely want that pattern to complete. Otherwise, too risky, and I'm not going to get in. Okay? So just to set things straight, the reason for me to wait instead of taking an immediate entry is the fact that the 2-hour chart time frame is still too risky to me. I'd like to have a momentum signal confirmation to get in. Okay? So that closes our cryptocurrency review. So at the moment, all the cryptos are just falling. We're just trying to figure out if the Bitcoin and other altcoins are about to find a support in that current area, or if we're just already retracing to lower levels. And in that case, I think Ethereum is going to break down that low. So we'll see about that. I really don't know. Once again, I'm a speculator, which means I'm taking risks by speculating bullishly on the Ethereum, Ripple, and IOTA. I could be wrong, and if I'm wrong, I'm going to have to give some of the previous gains I've been making, meaning I have to take a loss. Let's call it that way. It's going to be a tiny loss, but a loss anyway. I'm not right every time, and if I'm wrong, at some point I have to give some losses to those who were right. It's simple as that. So, moving on from this and trying to figure out what the hell's at play. With the global markets, we've had some kind of an outburst regarding the FTSE. Instead of triggering the bearish entries I would have liked to see, they're trying to retrace higher, even though I think that might not really be the final outcome. Things are not pretty with the UK economy. This is nothing close to be a trending situation in here, more likely going to be some kind of bearish prevail accumulation. So we're just trying to fuck up the bears and trying to hold the prices as long as we can. But from what I can see, this is abnormal trending, so this is what we call price distortion. Once again, this is not normal pricing, and we're going to have to pay for this. And at some point, we're going to have some bearish outcome. It's just that now is not the timing. We've got bulls and bears fighting each other in here. I'm just waiting for the next bearish signal. Could very well be back to the previous resistance and then fucking up all those who've been buying and supporting those prices. I still expect the global worldwide equities to feel some stress in the near-term scenario. Let's call it mid-term, because this is hard to figure out what to do at the short-term trends, because we've got too many short-term speculators trying to push up the trends forever and never, ever, ever surrendering. So we'll see about that, but I still remain bearish on the FTSE at the current time, just waiting to have the breakout confirmations to get into actual leverage trading. So right now we're remaining speculative in there. We've been trying multiple breakouts, failing in there. As you can see, bearish breakout, bullish breakout, bullish breakout. All those breakouts have been failing. So you should be having just one filling at the time. We're in fucking range situations, which means you just put the damn range scenario and wait. As long as we haven't broken the red area, there's nothing to fear. There's nothing to be concerned about. We're just accumulating stupid traders, and at some point we're going to have the bullish or bearish outcome, and I think that's the bearish one. That's the most probable right now. But just don't fear. I mean, as we are doing this, you see the market isn't trending at all. And when you're not trending at market's highs, it means that you're about to reverse, and reverse for a long time. When you're ranging the market summits, the market highs, it's generally not a good sign, okay? Normally, historical prices must be pushing higher, 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 higher forever. I mean, normally when you're historically high trading, it means that you are trending to upper prices. The fact that we are bursting the momentum like that, is more likely probably going to make a bearish outcome, just as we had back then. We tried a bearish outcome back then, we failed it. I think that one is the good one. Moreover, because this is what preceded that range structure. So it feels like the market has been doing strange behavior in here. It makes you think that it's just digesting things in here. All I think is that we're accumulating fucking big bears in here, and that what's about to come is not going to be pretty. It's just going to be the opposite of this, to the bearish side, and that is probably going to trigger recession upcoming to the FTSE. I mean, the UK economy is showing signs of recession, not pre-signals. We're just entering possible recession with the FTSE, which means trading historical highs right now is obviously not normal. So we'll see about that. It could be a price distortion. I'll say one more price distortion. But right now, I remain bearish on the FTSE, just waiting to see how that range is behaving. And from what I can see right now, It's just wanting to fuck up some stop losses, some additional stop losses. So if you're taking too much risk inside that scenario, then you're going to be fucked up. It means that the price is just ranging, so you have to keep the stop loss further away, not to get stopped out for no reasons, and just basically waiting. It's a patience trade. Whenever those who have the patience will get the reward. Those who don't will just get stopped out 10 times in a row. So don't trade this as a trend situation right now. Just wait for the trend to create and assess the fact that we're probably ranging in here. And if you're trading aggressively into a range, you're just the kind of guy you're going to surrender stop losses. Okay? So trade smart in here. We're going to have a look at the VIX. Once again, volatility has been picking up, but it's not exploding anyway. So what we have right here is kind of a stress situation, but that's not that big of a deal right now because we have a bearish momentum facing a bullish sine wave. Sorry, sine wave is still bearish actually right now. So we'll see how it plays out. I mean, today we've got the biggest ever catalyst with Apple publishing. So let's set things straight. All the technicals we have right now just don't give anything close to a signal. It's just that we're waiting for Apple to release, and it's either Apple is going to beat the consensus and we might have some bearish downward move on the volatility and indexes heading higher to find out the market top, or option number 2, Apple is failing, the market is selling aggressively once again the tech sector, and in that case I think equities won't be able to survive. I'm just going to give you some pure technical informations. If Apple, so okay, we're just going to take Apple because I think today is the only catalyst we could have, and tomorrow we'll have Tesla. So those two are the biggest at-risk pricings to me. Apple is doing really not good. I mean, what we're having right here is kind of a profit-taking, aggressive profit-taking ahead of the earnings. Might be sounding like of an insider trading, so we'll see about that. But from what I can see right now, we've got very optimistic retail traders who want to see Apple making new highs, whatever, and I can see some kind of insider trading in here, just getting out before things could get dirty. And if for some reason Apple was to gap down and missing the consensus in here or disappointing the market somehow, we can make a profitable outcome and release on Apple, and yet some lines will be disappointing the market and triggering some sales entries. It's just like that. I mean, at that point, we've got no fucking clue about what's about to happen. Just to be clear, it's clearly a 50-50 situation. First, you don't have the numbers, and secondly, you don't know how the market will pick up that numbers, those numbers, and assess what the pricing should be in forecasting Apple in the future. So it's a double uncertainty, and regarding this, you don't want to be trading with too much leverage. So yes, I'm still bearish on Apple, no questions asked, and I'm ready to take a potential 3 to 5% upward gap if for some reasons Apple was to upbeat the market. But anyway, if I'm wrong, I'm not going to take a big loss. If I'm right, believe me, I'm going to take a nice gain. And I think if it's not going well, Apple is heading toward that support. It's a big trending support, but I think this is the last time we're going to take those as support area. If for some reasons Apple deteriorates the way I think it will, no one's going to buy this, probably going to have a tiny pullback, and then we're going to fuck it up to get to extend that range to the downside, which means doubling the losses is to be expected in the long run in terms of Apple. First outcome could be bearish because of the earnings release and the current pressure regarding the tech sectors. But if we do have this, I think it's just going to be the beginning of something that is going to last longer. So we're going to have the first bearish outcome. In here, I obviously will take partial profits, but I expect the market to just do some kind of ABC brutal reversal in here. Okay, could be normally it's supposed to play in 2 waves. In 3 bearish impulses. So normally what we should do is consider this is making some kind of wave 1 territory, but I think extended wave 1 because of the market catalyst. So we could do just this, extended wave 1. Wave 2 generally retraces not much than 38.2% of an extended wave 1. We could have wave 3 shorter than wave 1, and then finally wave 5 shorter than wave 3, and terminating in here just to make an ABC retracement before making another 5 bearish impulse, and this is how we'll terminate the scenario. This is exactly what I've been forecasting for a month. It's just that right now we might have an additional timing with the fact that we have tech sector at risk. So now we have the catalyst. We've got the headlines that will support the market to fail and to fall. That's how it is, but I still think that we're heading there in terms of Apple, but we might be doing this in multiple subwaves, so have to take a partial profit in here if you are trying the sell entry. Be aware that this is kind of a bet in here, as you don't know what the number will be, and if the market is choosing the opposite side, then guess what? That's normal at some point, because remember one thing, this will always be chaos theory out there. You're never ever going to control anything, and you're never even going to control earnings release. So assess the fact that if I'm wrong, I'm just wrong, and that's part of the game. I'll be right later. Anyway, I think no matter how, no matter what, Apple sometime at some point is going to give up the gains. It's just a matter of time. It's just that right now we have a timing that is interesting to do it. We'll see if I'm right or wrong. So that's it. And the fact that I wanted to share with you is that if Apple is falling from the first support I've been highlighting is minus 17% from the current prices, and regarding the weighting of Apple into the indexes, if Apple is falling 17%, the S&P 500 is by itself, just by Apple's losing. And of course it's going to take down some other valuations, but that's a minimum of 0.6% downward move on the SPX. Okay, that's just pure mechanic. Apple's falling, the SPX is losing 0.6%, not counting in the other assets is my takedown with it. Okay, so take it for granted, if we're falling with Apple, obviously the SPX is going to gap down tomorrow morning, and it's going to do it pretty fucking down. So expect a 1 to 2% drop on the SPX if Apple is failing. And if that's what's about to come, then just have a look at the daily chart on the SPX. This is the level I wanted to sell. Remember, this is because of the context I've been choosing, and that's a choice I had to make. I said, okay, we're in range situation to me on the SPX, nothing close to a trend, yet everyone think we're trending. We'll see if they're right and I'm wrong, or if I'm right and they're wrong. That's how it is. If I'm right, this price area will be sold, and Apple could be the trigger to exit the red area. We will just have tried hard to get out, failed, and reintegrated the day right after. This is not a breakout strategy here. This is a market that has been trapping some bulls in here. So if we're going down, bulls would have been just trapped in there, and I would have been right. Just the market would have faked a bullish outcome in here, just to trap the bulls, just to wrong for them even harder later on. So that could be still a valid scenario to me right now. It's just that Apple is going to make the choice. Either Apple is going to release the tensions out of tech sector and the entire market, and we're probably going to have to make new historical highs regarding the SPX. Option number 2, Apple is disappointing, taking down other assets with it, probably triggering a minus 2 to 3% move, which means we're going to start taking down the stop losses in the range. First stop area is right here, second stop is in here, and final stop area is in there, which leads me to believe that we're going to fuck up the first one, second one probably in a row. So if we're going down, we're probably going to be there until the end of the week. Probably be there actually until the end of that week, which means we could have some pretty fucking bearish week ahead. So I'm sorry to tell you this. This was expected. This was what I wanted to trade. Have a look at the damn weekly chart. If Apple is failing, if we're going there and making a bearish engulfing of that pattern in here, we're going to be bearish, and not for just a week. It's going to be 2 to 3 weeks ahead bearishness, if not to say more than that, if that's what's about to come. Okay? On the opposite side, if for some reasons this was just a piercing line, then we're going to get to, sorry, no piercing line, it was just piercing through the resistance to get easier above later on, then in that case, I'll trigger stop losses, bulls would have been right, and we'll be in a trending situation. But I don't think that's the case, nothing close to this. So we'll see about that. Apple is going to be the game changer no matter what. It's just that at that point, we have not a single clue about what's about to come. We've got that breakout attempt, but from what I can see, This is nothing close to a breakout pricing. So it's either Apple is going to trigger the trend or Apple is going to reverse the trend, wrong foot, all those who've been trying to trade this, and this will basically be one more range breakout. Try the bear, try the bullish, reintegrate the range, fuck up all the stop losses of those who've been trading the trend, just like I've been. I mean, right in here, I've been taking down stop loss. It wasn't losing stops, but just I tried to get into trend trading in here, I got wrong-footed. Now I think the bulls are about to be as well. Just to set things straight, I think that's how it is. We're just in a fucking range situation. Everyone is trying to trade trendy. I've been trying to trade trendy and I was wrong. I think those who are trying to trade trendy right now are about to be into problems ahead again. It's just 2008 is a fucking range and everyone wants to see trends in there, and I think both will have been wrong. Okay? So that's how it is. We'll see if I was right or wrong, but if I'm right, we're going to take all the damn stop losses of the bulls at once. It's be a single move. There will be no pullbacks. We're going to take them down one by one. First short-term stop loss, then mid-term short-term stop loss, and probably long-term stop losses in there. And this is where I forecast us to find some potential first support area. Okay, so I think we're going to have to break down that low just to fuck up the stops of the long-term traders who've been putting too many stop losses below, and we'll just get there just to fuck up that volume. And of course, afterwards, I think bullish entries might not be the worst choice to make. I mean, as I said, to me, the big short situation is only possible if we make new historical highs on the SPX 500. As long as we remain below the previous high, we're just into a range kind of trade, which means if we're failing in here, I forecast us to go just there. If I'm not certain, I have no certainty about what we'll deal with in here, either the long-term stop loss will trigger or not. If they're not, we're just going to fail into the blue area and buying again. If we trigger the stop loss, I think we're going to have an extended range structure in here, probably heading slightly below 2,500, but I'll be ready to buy again in here for 2019 to be positive. At least the end of the year being positive and leading to a potentially bullish 2019 before heading into the big crash situation. But that will just be volatile ranging ahead of the final bullish impulse leading to the big short in the end. Okay? So these are the scenarios. You already know about those. I'm not changing anything. You knew the multiple options we have right here. I just don't know what the market will pick. It's an interesting price area. Perfect to speculate, which means high potential rewards out of tiny losses if you're wrong. But you have to leave some room for the market to price the current zone. It's a big game changer, really big and long-term scenarios are at play right now. So don't put a 0.3% stop loss. That's nonsense. Put a 1 to 2% stop loss on the asset. That's the minimum you should put out right there. Final asset I'm having a look at right now is the damn gold. It's just pricing like what the fuck is going on. It's just that once again all those assets have been under heavy pressure and manipulations because of the recent action we had on volatility selling, asset pricing in equities. We've had many distortions and these are still ongoing, and we can clearly see those happening into gold as well. So it's just being patient, but anytime the gold is going to break a resistance is going to be the case for the next following month. So we'll see about that, if that's about to come or not. For now, we're still pricing near the support, which means the market wants some bearish pressure. We'll see if the bearish pressure is not holding along, and if we are getting back to resistance once again, I think that will be the time to reinforce. So just to put that in a context, either we're going to fuck up that support, take down additional stop losses in here, but you don't want to put a stop loss in here because the market, if it goes there, will try to fuck up stop losses. It means that this is stop hunting in here. So you don't want to be among those who've been hunted if that was the case. So if you put a stop loss, don't put it right below there. Put it a little bit lower, reduce the leverage if necessary, but don't get into a stomp hunt kind of trading, because I can see that that's what the market wants to do right now. It will try to fuck up those who've been putting a stop loss here just to make some kind of a lower shadow candle. So I suggest you leave some room for the market to work out the price area above 1,200 regarding the goal. I think if we're going there, it's really too late. We shouldn't go there, but we could eventually forecast the price to make some lower shadow candle. You can clearly see the tension we have in here. Okay, it's really an over-tensed market, and we could have one more bearish impulse, but I think a stop loss shouldn't be set right in here. Just take that range, okay, and consider that the market, if it wants to break lower, is going to extend that range and give you a clear and clean target to the downside, which is obviously 1,200. So you have to put that stop loss below that price. And if you can't just pay for this, then just reduce the leverage. But I think if you can't hold the price to go there with the gold, you are under problems. Because I think that's what the market wants to do. It's just a final fucking stop hunting scenario. Just in here, you can be sure that if I have anything close to a buying entry signal, I'll get in there and I'll not do it pretty. I'll do it with fucking leverage in here. That's the first time regarding the gold I'm ready to put some leverage out of speculative entries, which means I'll buy aggressively the gold in here and take a maximum stop loss risk, which means a 3% loss. If we get there, I'm ready to put a 3% stop loss regarding equity, which means I'll be trading gold with leverage for the first time, just because I think we will have been too far into that manipulation. But from what you can see right now, the market wants to go lower, so just let it go. Okay, and don't put a stop loss in here. Otherwise, just stop right now and wait. It's either we're gonna get there brutally and we're gonna fuck up all the bears in a single move. I mean, if we can do this, I think we can do just that in half an hour. We could just outburst and taking all the stop losses at once. So to those who keep on pushing to the downside for no reasons, they don't really know why they're doing this. They're just trying to follow the trend, thinking that this is trending. This is nothing close to trending. This is just market manipulation, and at some point, it's not going to work out. So you don't want to follow that trend, and if you do follow it, then do it with very, very low leverage, because be aware, this is going to reverse very brutally at the moment that the manipulation will fail. Let me see if I just missed something in here. Yeah, we have to talk about the damn AUDNZD. This one has been playing with me. I've been triggering partial profit taking in here, right? Because we had market catalysts. We were working below the support, making candle closes, and I decided to take half the position off because of the underlying risks to go lower level and trading in there, in which I would have been ready to take some very nice reinforcements, and the market just fucked me on the opposite side right away. So I just took profits out of no reason, and the market just wrong-footed me right after it. So I decided to reduce the risks just to buy at better prices, and the market just proven me wrong. That market clearly is bullish, but I've been wrong-footed in here. That happens. I'm stupid. I shouldn't have done that, but I had no signals to remain bullish. All the signals were red, and I decided the market could just do a lower shadow candle upon the market catalyst. As I've been trading this with leverage, I was leverage 7 into AUDNZD, sorry, leverage 6, and I had to divide it by 2, which means I've been going back to leverage 3, expecting some kind of potential breakout attempt. The market just failed, got up, so right now I'm just waiting for it to get above the blue area in here to forecast some bullish entries, and I'll get to restore leverage 7. But right now, all that happens in between is just noise to me. Buying right now will be the worst case scenario, because we could just go there to trigger stop entries and then retrace and break down. So I don't really know what's at play right now. It's just fucking pure noise to me. And as long as it remains like that, I'm just not trading. Now I want to see the bears fucked up with the price getting up here again, or I'm just not trading. Okay, so it's really waiting to get there or just doing nothing at the moment, waiting to go below. So it's either going there or going there to me, but what happens in between is nothing I care about. I've already reduced the leverage because I think this is just noise and shouldn't have happened. But now that we're having it, we've tried to break down, reintegrated. I want to see the market performing bullish, or if this is just reintegrating to fuck up bears, to fuck up again, then I'm ready to wait and be patient. We've got lots of catalysts ahead. So I'd rather let the market digesting this before getting into jumping into leverage again. Regarding the euro-yen, I think we're having something pretty interesting ahead. Risks have been some kind of attempting to narrow. We're at the first resistance level, but I'm basically waiting for a binary option right now. I want to see the market finding some resistance in here, and as you can see, it's already at play. I expect some kind of pullback in there, and going there, and then going slightly higher, either to test that resistance or this one. But I'm going to short each one of those two to reinforce the EURJPY scenario. Stop losses remain above the previous market top, which means right here I'm just getting into short trading in there as a wave 2 scenario. Wave 1, retracing wave 2. I know this can sound brutal because you can see this and you say, oh, I don't want to short something like that. It's brutal. It seems like a trendy move. That's normal. It's what we call the extended range consolidation, and guess what? This is what we've been doing. We're making wave A, wave B, deep wave B right into the expected area, and generally the wave C you have into extended flat consolidation looks like a trend, because this is a 1, 2, 3, 4, 5 scenario that is ongoing right here, and generally everybody is wrong-footed by that scenario. It means that everyone thinks the trend is bullish, yet we have to sell, and the next one is going to be a wrong-footing move. So the next bearish impulse, if I'm right, is going to be fucking impulsive. Expect that to be straightforward. I mean, we're going to wrong foot the bulls who will be buying in here and take all the stop losses at once, which means when we'll reverse, we'll very fastly go there to take down the stop losses of bullish speculators. Okay, so I expect the market to just go this pretty fast, then digesting the stop hunting. And then we'll have the second bearish outcome, and I think the market will just fall apart in that kind of scenario. Okay, so don't expect to be vertical like that, but the structure is this: going there, working around the stop loss, and then extending the losses to go even further, finding the potential next targets to come. Okay, so be patient on the EURJPY. I think that scenario is still pretty much ongoing right now. We're just messing with the bulls, letting them go in to just fuck them up later on. So I remain heavily bearish on that scenario. It's just a matter of time, but I'm pretty happy with what I'm seeing right now. The fact is that we have that bullish breakout because of the Bank of Japan, who's been impacting the yen during the night. But as you can see, it's trying to trend, but it's not working well, which means we're still in range, and that's what I expect. We've got the sine wave target. It is just right here, which means it looks like a trend, but it's not a trend, which means we're probably going to have to restore the trend, which is to the bearish side. All right, so this is all I'm watching right now. Of course, all depends on the risking asset regarding Apple's pricing. So this is all about that today. It's just about that, and we'll see how deep we can go in that perspective or not. If Apple is taking down during the night, I think all the worldwide equities will suffer from it if the biggest market cap ever is just losing 20% overnight. We'll see about that. That's highly speculative, so don't put too much money in there. If you've been putting too much money in the market right now, don't be surprised if you take heavy losses tomorrow. And of course, if you take a huge gain, then good for you, but that's nothing close to trading. It's more like betting, and once again, that's not what I'm trying to teach you guys out there. So goodbye, see you tomorrow, and we'll see about what Apples will have released, and more importantly, how the market will have reacted out of this. Bye guys.